good afternoon, good afternoon, good afternoon. It is time for another lunchtime lesson. Lunchtime lesson. Lunchtime lesson. Y'all know I just did that for Rocky, right? Let's do it for Rocky one more time. It's time for another lunchtime lesson. What's up, man? Good afternoon, good afternoon, good afternoon, everybody. If you popped up on this live, then I know you a true blue member of the Spider Gang. And just in case there's anybody tapping in and don't know who I am, my name Timothy Lee Rogers Sr. And I just get on Al Gore's internet whenever I feel like it and talk about the stock market, right? Now, today, we gonna talk about, let me put my pitch up, man. Y'all got me slipping. And I'm going to try not to say right 900 times today. I'm going to try not to say right 900 times today. What's up, Felicia? What's up, Trader Mo? What's up, Seawalk? Today, we are talking about, why does it always get out of there, thing? Move out of the way, right? Today, we are talking about knowing this one thing is game changing. Yes, I said it. It's not clickbait. Knowing this one thing is game changing. You hear me? Right? And if you stick around to the end of this lunchtime lesson right here, I am going to share with you one of my personal entry models that I used today for you to go back and back test for yourself to see if it fits your trading style, and maybe you can implement it into your arsenal of trader tools. I don't know why during lunchtime it always says my internet connection is bad. Hopefully y'all can see me well, because it keep telling me my internet connection bad. Let's get into it, man. Let's talk about knowing this one thing that's game changing. Well, Tim, what is this one thing that's so game changing? Right? For the note takers, right? How many times have I said right already today? How many times? I've said right 50 times already today. This one thing for the note takers. Let me get my notes so I can take notes with the note takers. And remember, if you want one of my personal entry models, stick around to the end, right? There I go again. Share it with somebody who on their lunch break right now, and you know they may want to tap into this. What is the one thing? Let's make it big. Let's make it big. The one thing that you want to know where price is going. That's it. There's no, you know how sometimes when people tell you this is all you need to know, and you be like, it's got to be more than that. That's it. How many times have y'all heard me say the most important thing is understanding where price is trying to get to? That's the most important thing. That, like, I only trade ICT concepts. What's the first thing that Michael taught? The first thing he taught was, where is price trying to go? The first thing he taught was understanding like the elements of a trade setup, understanding liquid. That's where is price trying. That's what he didn't teach. He talked about PD arrays inside these things. He told you, you're going to learn what these PD arrays mean later on down the road, but in the beginning, all he talked about was where is price trying to go? Because that's the most important thing. When this sunk in for me, that was my aha moment. Mind blown. Right? What's up, Rhonda? Right? I be in here. You ain't shout me out yesterday. Sanjay, you don't be in here like that. You be in here, but you don't be in here like Rhonda. Y'all know I don't mind calling you out. You don't come here trying to call me out. Don't come here trying to call me out, Sanjay. You be up in here, but you don't be in here like Rhonda. You don't be in here like Little Here to Learn to Share. You don't be in here like Lil Hawk. You don't be in here like who else? Taryn. You don't be in here like Taryn. You don't be in here like Father Led. You be in here now. You be in here now, but don't. I ain't sitting for you. So don't come for me. Shout out AJ. What's up? Shout out. This is one of my internet daughters right here. This is one of my internet daughters. She was upgraded from niece to daughter. Shout out AJ. All right, let's get back into it. Sanjay. You be in the cut. You be in the cut. Neospore. You hear me? What's up? Shout out my dude Doc. You know what I'm saying? Shout out my dude Doc. Hey, let me start looking at the chat. Let's get to it. Right? This right here, with all due seriousness, all jokes aside, time to get serious now. You want to know where price is trying to go, right? Now, I know you hear, like, I used to hear people say this all the time. You got to know where price trying to go. And they never gave me any kind of directions or any kind of compass or any kind of roadmap or any kind of guide or any kind of anything, right? So what I want to do, I don't want to be that person to say, you got to understand where price is trying to go and not give you a guide, right? So the guide I'm going to give you is the guide that I use for myself, right? This is not the entry model yet. You got to, when I say, okay, I'm getting ready to give you the entry model, that's when I'm going to give it to you. But right now, we're just talking about where is price trying to get to, right? Now, if you want to day trade, you can use for any time frame, right? You can use, and I ain't even going to lock it to day trading, swing trading. You can use it for, you know what I'm saying, your SPY calls, your SPY puts, your intraday options, your intraday futures. You can use for anything, right? Now, what you want to do, you want to understand the narrative of the higher time frames, right? Go out with the right again. So we're going to go to the monthly. Anybody that's been tapping in, right? Right. Right. Anybody that's been tapping in, you understand, you already know what I've been talking about with the monthly. So let's just use the monthly, for example. We said that all of this right here on the monthly, right? All of that right there on the monthly. Watch this. I hate when they be doing that. Let me get this on, like it's show on all levels, right? Right. I can't help it. I ain't even gonna worry about it. I ain't even gonna count myself no more for how many times I say right. So we said all of this right here on the monthly, all of this area here, we're gonna go from that red candle right there, right? Because that's a crazy wick, right? I ain't gonna worry about them crazy wicks. So I'm just gonna look at that's the highest wick that I'm gonna use right there. And the reason why I'm using that as the highest wick right there is because that's the propulsion block that we was talking about. That was the propulsion block. This right here was the original order block. The August and September candles was the order block, the bullish order block. So the price of the bullish order block is the opening price of August, right? That's the price of the bullish order block. That's the opening price for the entire bullish order block. The second price that you would be paying attention to the downside, I haven't gotten to it yet. It's a lot of stuff you got to think about when you understand what price going, right? The second price you will be paying attention to is the last down close candle of the order block. So 42.31 even, that's the first price on the monthly you paying attention to, because that's the bullish order block price. And then 40.91 even, that's the second price you want to be paying attention to the downside, because that's the last down close candle of the order block, right? So we paying attention to that. We're doing our thing, right? And so this candle right here, it's inside the order block, and then we got displacement off of that. So you're paying attention to the opening price of that, right? That you're paying attention to the opening price of that to the downside. Why? Because that's an order block there, 41.8925. And inside any order block, you're looking for from the high to the opening price to be the most sensitive area of that order block. In this case, we got a break in market structure to the upside, right? So it's bullish. We're in a bullish pullback. We're retracing back. Where we retracing back to the imbalance in the order block. So you want to see this order block be extremely, extremely sensitive from the high to that opening price, with the main focus on the consequent encroachment of that wick, right? Which would be 42.4575. Now, we got our understanding of the sensitive areas, the we got our reference point, we got our balance price range, we got the sensitive area of our reference point. Got all these prices marked out. Okay? Now, let's get into how do you understand where price is trying to go. Got a secret for you. We've been doing it already. Remember I said it's a lot of stuff you got to understand. Right? It's a lot of stuff you got to understand when you looking at this price. We've been doing it already. All this stuff I've been doing, when I said we got a balanced price range right here, we got an order block there, we got another order block inside that order block here. This is the point where you want to start paying attention, when you get the expansion with displacement. Don't try to guess what's going to happen inside this consolidation. Be patient. Now, these are monthly candles, so your patience got to be long suffering. Long suffering, thus saith the Lord. These are monthly candles, but it's all fractal. So when you're looking at candles, understand what time frame you're looking at, and you want to keep in your mind what's going on a higher time frame. So balanced price range, expansion. Well, Tim, what's the difference between expansion and displacement? I'm so glad you asked that question, little Timmy Rogers. Haven't seen you in a while. So expansion is when it starts to move away in either direction from this consolidation right here. How can you identify that expansion as being displacement? When you have exaggerated moves in that direction and you leave imbalances. That is the algorithm tipping its hand that, yes, I'm going this way and I'm going in a hurry. And this expansion coupled with displacement is what Michael calls, right? Okay. So let's do this right here for the note takers. Where's price trying to go? Right. One, you're looking for the expansion. Somebody spell it for me. Expansion. I did it right. Right. Two, you want to see displacement. Now, some people may say, Tim, ain't that the same thing? I don't care what you call it. I call it different things. How do you identify displacement? Expansion. Moving away from, let's do this right here. Moving away from the consolidation. No, I spelled that wrong. Consolidation. Moving away from the consolidation. Right now, displacement. Moving away aggressively, aggressively. Pull that up. Help me out. Spell check. Moving away aggressively and leaving imbalances. Imbalances. Leaving imbalances. All right. So you got your balanced price range in the form of consolidation. What makes it balanced price range? Because we offer buy side and sell side, and then we leave it. Once we leave it, that's the algorithm tipping you off that this is now a balanced price range. I don't care which way it leaves. You have sell side delivery, buy side delivery, and then the algorithm leaves it. All right. It can be as simple as these two candles right here. Buy side delivery, sell side delivery, and then leave it. It can be a consolidation. Sell side delivery, buy side delivery, sell side delivery, buy side delivery, sell side delivery, buy side, and then leaves it. Balanced price range. Got it. Once you get your expansion with displacement, that is very important because the algorithm is leaving clues behind for you to get aboard the train. All aboard. You don't want to chase the price when it's moving. Matter of fact, my little brother hit me up today. He was like, man, he said, man, if we was talking about either breakers or mitigation blocks or whatever, right? So he was like, he said, man, if I'm, come here. He said, so if this is A, he said, man, if this is A and this is B and this is C, why am I buying at B? Why not just buy at C? I said, you can. But the way the the I'm drawing a blank. Concepts. The way the concepts work is you're waiting for the algorithm to tip its hand, and then you just go get on the bus. All right. So the algorithm is telling you, it's saying when this is a point where you anticipate price to reverse. You're anticipating a reversal at A. So when you get to A and you get the response, you start paying attention because you're getting a response at a place where you anticipated price to react. You come up and you set a high at B. You drop down at C. He was like, why don't I just buy it out if I think it's going to go up? Because right now you're thinking it's going to go up. The algorithm hasn't given you the clues that it's going to go up yet. Now, it comes down and it wipes out anybody who got long because they thought it was going to go up at A. We're all thinking it's going to go up at A. So anybody who thought it was going up at A and they got long right there, they just got punished on C. Anybody who thought it was going to go down at A, they're happy right now. They're laughing. I told you it was going to go down. And then the algorithm punishes them for going short at A and putting their stop above B. Now, from C up to this imaginary D up here, the algorithm has given you the clues that it really wants to go up. So what you thought was going to happen here, now the algorithm is telling you, showing you clues. How? It has this expansion, it has displacement because there's an imbalance in here somewhere, and it has a reference point right here. In this case, it would be a breaker. Now you have a reference point as a breaker. You have an imbalance over here, and that's why you're getting long at B, because the algorithm has left this area, and with this expansion, displacement, and this breaker, it's saying, I don't want to go back to C. So now everybody who got short at A, if their stop was not at B, if it was higher, they're underwater like a big dog right now. So when price start coming back down, it's not going to let them get out at break even. It's not going to come back down here. So that's why you would get long at B right there. Understanding where price is going. Now let's relate it to this right here. Our balanced price range down here. This is the area where we're anticipating price to reverse. Why? Because that's the lowest low that we got in this price action. That's the lowest low we got in this price action. So we're anticipating this to do something at this area right here. So as price comes down to this area, runs below the sell side, starts to consolidate, runs below the sell side again, right? So we've come down, we've taken out the sell side here, right there, push back up, came down, took out the sell side again, right there, came down, took out the sell side again, and then we consolidated some, and then we moved up. So we came down to a point that we anticipate something to happen, right? Came down to a point where we anticipate something to happen, went back up to a PD array right there, a bearish order block, came back down and broke through that right there, and then dilly-dallied a little bit, and then we got expansion with displacement, right? We got expansion with displacement. Here is the clue that it's displacement. There's the clue that it's displacement right there. We have an imbalance. We got an imbalance there. So now, and this right here was the break-in market structure right there. Why is that the break-in market structure? Because this high is the high that took us down and took out the sell side, right? That high took out the sell side. Well, Tim, we broke a high right there too. Yes, we did. That right there, I just count that as a shift in sentiment. That's just a shift in sentiment right there for me. Why? Because this high did not come down and take out this sell side right here. This high took out the sell side. So once the market breaks that high that took out the sell side at a place where we anticipated price to reverse, that's the break-in market structure. So now that you have your break-in market structure right there, you have your imbalance. That's a bullish break-in. So now price is bullish. So now we have an imbalance right here, and we got an order block right here. Where do we say the most sensitive part of that order block is? The wick to the opening. All right. And if you look over here at the breaker, right? If you look over here at the breaker right there, where do we come down to? That sensitive point of the breaker, right? We got a breaker there. We got an order block here. We got an imbalance here after a bullish break-in market structure. So now, where is price trying to go to? It depends on if you're trying to trade every move of the market or if you're only trading with the bias. So if you're only trading with the bias, in this case, which is a bullish bias, why? Because we got a bullish break-in market structure. Where is price trying to get to? Up here. These equal highs up here, right? That is Picasso. Let's go get our homeboy. If you're only trying to trade with the bias, there you go. Picasso. If you're only trying to trade with the bias, Picasso is there. Get out of here, lines. Sick of y'all. Picasso is there. So if Picasso is there, when we get our expansion and our displacement, we're not going to chase price. Price has left us some clues as to where we can get in. Whatever your entry technique is, if you are a fair value gap trader, this area right here would be your bus ticket. You would be trying to get on the bus to go see Picasso at this imbalance. If you are, yeah. It is. That's why I call him Picasso. Right? If you are a fair value gap trader, this is your, you get your ticket punched here. if you are a breaker trader, right? You're keying in on the breaker right there. You're keying in on the breaker. In this case, it's right there at first touch. The more you try to go into the PDub rate, you're gambling on not getting picked up. What We'll talk about that in a minute. What determines if you want to get it at first touch or let it go a little bit further, or we'll talk about that in a minute if I remember. If you are order block trader, here's your order block right here. The original order block is there. The original order block is there. And then your propulsion block is here. Right there's order block inside the order block with displacement after it. Right? Order block inside the order block with displacement after it. That's your propulsion block right there. Where is it? In that sensitive area. Where is it? Coming down to consequent encroachment of that sensitive area. So if you're an order block trader, you're entering here. You're a fair value gap trader, you're entering there. You're a breaker trader, you're entering down here at the breaker. And then you're trying to go back to your draw up here. This would be your low-hanging fruit right there. Why? Because anytime you pass a high, you anticipate price at least retracing, maybe even reversing. So that's your low-hanging fruit when you enter on either of these here. Now, let's talk about, that's trading with the bias. That's trading with the bias. Now, in this case right here, in this case of this price action, when we came down and took out this sell side right over here on the June candle, when we came down and took out this sell side on the June candle, price did not leave any imbalances in this area here. It did not leave any imbalances. So the only internal liquidity in this drop right here was this bearish order block right here. That's the only there's no, you have a swing high right here also. I jalapage. You got a swing high here, but there's no imbalances in this area here. So as price came down and took out this external liquidity, there's nothing to come back to as far as imbalances in here. So once we come and make this break in market structure, that's why Picasso was resting up there, because there's no imbalances to speak of as a form of internal liquidity for this drop right there. Now, let's say you want to trade both ways. I want to trade both directions. If you want to trade both directions, what do you look for? You look for the note takers. Got to get my note takers. Or trading both ways. What do you look for? An attack of external liquidity. An attack on external liquidity. Then market structure shift. Let's just say a break in market structure. Break in market structure back towards internal liquidity. Right? And what does that look like? For trading both ways, you want to look for an attack of external liquidity, and then a break in market structure back towards internal liquidity. Now, this break in market structure back toward internal liquidity, that's going to be on 2 time frames down for my personal taste. If you want to trade both ways, right? 2 time frames down for the way I trade it. 2 time frames down. Right? Y'all tracking? Y'all tracking? Okay. So get all this out my way. Move B. Move. I guess I could just hide them. Now, so in the case of this right here, we're talking about trading both ways. We're using the same little range that we talked about before. Make this big so y'all can see it. Put it over here to the left. Make it bigger so y'all can see it good. Now, in the case of when we came down here, went back up to the bearish order block right here, and then we came back down and took out this sell side right here. Coming down here, we took out external liquidity right there, and we set a new low. So from this high to that low right there, this is our new dealing range. This is our new price leg. We created, we offered sell side delivery and buy side delivery, and then we left that area. And if you see from our new price leg here, we took out external liquidity. Boom! Took out external liquidity. We did not reject that external liquidity. So what do we say? If we take liquidity and we don't reject, where do we look for our draw? Up and to the left, right? So we took out the liquidity, did not reject, so we look up and to the left. This would be the first high, and since these highs are so close, we put Picasso right up there. So we're looking for the draw over here. Why? Because where's my arrow? I just use this. Why? Because we took out this liquidity and we did not reject. So we're looking over there for a draw. We're looking up and to the left. Now, we're looking over there. Boom. We took out that high. Boom. We got our displacement. So now we understand all of this lining up. We took out the high, closed above it. We got our imbalance. This is displacement. Now we understand that we're going up there. We took out external liquidity. And what do we say? If we want to trade both ways, you look for an attack on external liquidity. Attack, 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 attack. We just attack the external liquidity right there. Attack, attack, right? Now, we look for a break in market structure back toward the internal liquidity. Where's the internal liquidity? Right here. There's our imbalance. Where's the internal liquidity? Right here. There's our order block. Where's the internal liquidity? Right here. That's our breaker. So you got an imbalance, you got a order block, you got a breaker, all on your higher time frame, right? All on your higher time frame. So if you want to trade both ways, now that we've attacked the external liquidity, now we want to drop 2 time frames down. This is a monthly chart, so we're going to go weekly, daily. Whatever. If you're looking at a daily, you'll go 4 hour, 1 hour. If you're looking at a 4 hour, you'll go 1 hour, 15 minutes. If you're looking at a one, you know what I'm saying? Y'all get the picture. So we're gonna go to a daily. Gotta get all this over here. I know this is gonna go crazy. Everything gonna go crazy when I go down to the daily. I tried to get it all in the picture, but because I knew it was gonna go crazy. I knew it was gonna go crazy. Now, that's the imbalance, right? That was the imbalance changes to green, so we'll know that was a bullish fair value gap. That was a BISI. There's your imbalance, right? This is the sensitive area of that order block. The breaker's inside there somewhere. Now, what do we said you look for? A break in market structure back toward the internal liquidity 2 time frames down. All right. So, what do we say break in market structure was? When you have a low, this low right here came up, took out some liquidity, right? That low came up above, taking out liquidity. So we came down, and when we broke past that low right there, what low is that? July the 10th. When we traded down below that low right there, that right there was your daily bearish break-in market structure. Your daily bearish break-in market structure. Now, if you're into trying to look into the consolidation here and say, oh, we got a low that took out, I look for sponsorship. I look for moves where the big boys moving it. I'm looking for sponsorship. This was a sponsorship move right here. So when we took out that low from a sponsorship move, that's what I'm looking for. Breaking market structure right there. Right? I'm going to borrow this candle right here. This line. Breaking market structure right there. Now that we got our breaking market structure back towards the internal liquidity, we came all the way down inside the imbalance before getting the breaking market structure, right? But you still have the rest of this imbalance, and you got your order block down here. So when price, what did it leave in the wake? It left, you got all kind of internal liquidity in here, right? All kind of internal liquidity in here. And this one right here, this is a weekly liquidity void right there. That's a weekly liquidity void. And we got a daily, we got some daily imbalances up here. Now, how do you know which one you're going to target? Whatever's the higher time frame imbalance inside your move, you want to put the most weight on that one. You want to put the most weight on that one. So inside this drop here that took out and made the break in market structure, right? You got a weekly liquidity void above this daily order block, this daily fair value gap. So you're not trying to get short to attack this based off of that. Why? Because you got a weekly liquidity void above you. So you want to put the higher time frame imbalances and PD arrays. You want to put more weight on that. Now, you got an order block in line, a daily order block in line with a weekly liquidity void. So now this daily order block is a higher probability than this daily order block and this daily fair value gap. Why? Because it's in line with a weekly liquidity void. So that would be your area you will want to be targeting as your possible entry. Your stop is you're going to have to take into account all of the gap risk. So you're going to put your stop above the high because you got gap risk here, but you want to try to get in at the most probable spot. You don't want to try to wait for it to come back here. Why? Because there's no higher time frame imbalance above this imbalance right here. So there's nothing drawing price up there at this time. This is a higher time frame imbalance above these, so price is being drawn back up to this higher time frame imbalance. Could price get all the way there? Yes, it can. That's why you want to take into account with your stop loss and put it above these daily imbalances. Now, that is where you get on the bus for trading both ways, going short. You're trading against the grain. What do you target when you're trading against the grain? You want to target your PD arrays based off of rank. You still got the rest of this higher time frame imbalance to get to. So low hanging fruit would be these relative equal lows, but it's highly probable that it finishes this imbalance. Why? Because we got a breaking market structure to the downside on the daily with displacement. So the algorithm is saying, I want to go down there for something. What is that something? At least filling the rest of this imbalance, because we traded halfway through it coming down here. At least the rest of that imbalance. Then once we get to the imbalance, we close on the outside of the imbalance saying, I want to go down there for something. We've taken out external sales side from here to here. It says, I want to go down there for something. What's the something it wants to go to? Here's a higher time frame PD array right there. Now that we've hit that higher time frame PD array, you don't want to keep being greedy. You don't want to keep being greedy because this was your order block on the higher time frame. The order block on the higher time frame job is to block price. And now that we've hit that order block right there, that's somebody's entry to go long back up here to Picasso. Yes, it'll be around C-Walk. I don't know if you're still here, but it will be around at the end of what's the name? The end of the day. But for anybody who's coming back to watch it tomorrow, the end part, when I give you one of my personal models that I use for you to go back and back test, I'm going to cut that part off. That's just one of the be here to get it things. It's nothing fancy at all. But I'm going to cut that part off. It's just a little, yeah, sitting through me running my mouth for an hour, little free little gem. But I can't edit it out until like the next day. I got to wait for YouTube to upload it and all that right there. So now I'm done. Now I'm going to give you the my entry model. And 50 minutes and 30 seconds. Cut it off there, Tim. Ha! Okay. Spoiler alert. I just gave it to you. I just gave it to you. I just ain't spell it out in detail. I just gave it to you. Now, let me get all this junk off the chart and I'm going to spell it out for you in detail. Again, 50 minutes and 30 seconds. Cut it off, Tim. Let me make a note of that. Cut it off tomorrow at 50:30. Cut it off tomorrow. Oh, you know what I'm finna do? I don't feel like editing. So I'm just finna end this live and I'm gonna get right back on the live and then I'll tell you what it is. That way I ain't got that wait tomorrow and edit it out. So I'm finna end this live and then I'm gonna get back on and then I'll give you the model. Till the next time I feel like jumping on Al Gore's internet and share something with y'all. Y'all be safe out here in these trading streets. If you want the entry model, just pop back on. Gone.